I think that this squeeze in the gold market and also silver, and it won't be just confined to them, because if you look at the value of base metals, they've been left behind hugely in all this. I think that's going to be a big catch up. The overall consequences of this, I think, are going to hit everybody very, very badly. But it does mean that you've got to hoard gold as much as you can, silver as well.
I mean, look at every other currency, every other fiat currency that prices gold and prices silver has been through the roof a lot, led the way higher. And I look at CNY silver, Euro silver, forget 2011 highs in dollar silver. It's through the roof. It's just every day. It's higher and higher and higher.
The structural decay of fiat currencies underscored by Alasdair Macleod, alongside the tactical errors in futures trading noted by Andrew Maguire, capture both the slow burn and sudden shocks shaping today's gold market. Alasdair Macleod pointed out that the debate over gold being overbought or oversold is irrelevant, since the real issue lies in its relationship with fiat currencies, which are built entirely on confidence. He noticed that gold's purchasing power has held steady over millennia, in contrast to fiat currencies that inevitably lose value and eventually collapse. He explained that the US dollar effectively became a fiat currency in 1933 with its devaluation, and even more decisively after the end of Bretton Woods in 1971. For him, gold's enduring stability makes clear that the era of fiat dominance is approaching its end. He also emphasized that China recognized this truth long ago. Emerging from communism without adopting Keynesian economic thinking, Chinese leadership concluded that capitalism would ultimately fail through its currencies. As a safeguard, they began accumulating gold shortly after Mao's death, with formal regulations in 1983 assigning the People's Bank of China full control over national gold and silver reserves. Andrew Maguire pointed out that short-term trading behavior in the futures market has misled many investors. He noticed that even experienced market participants exchanged their physical gold for fiat in the belief they could re-enter at better levels. This approach left some missing out on major upside moves, including one investor who lost the opportunity to capture a $1,000 rally by waiting for an oversold correction that never arrived. He added that his data further supports the idea that many are misunderstanding the current market dynamics. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue delivering sharp insights and expert perspectives on the forces driving gold, silver, and the broader financial landscape. Thanks for watching.
Is this so-called overbought condition in the futures market, which has wrong-footed quite a few people. In fact, it's wrong-footed one or two people, which I'm really surprised at, who have been busy exchanging their fiat, busy exchanging their gold, their money, the real gold for money, for guess what? Dirty fiat exchanges, and have missed, in one instance that I know of for sure, has missed the last $1,000 rally, waiting for this oversold condition to revert. Alasdair, I know you've got a lot of hard data here that is probably going to surprise a lot of people.
Yeah, well, I think your friend who took his profits $1,000 below this, you'll probably power back in over 20,000 sometime. I don't know. That's what tends to happen. I mean, I speak as as a stockbroker of some decades, knowing the human behavior, if you like, of investors and speculators and so on and so forth. And there is absolutely no doubt. I mean, the sensible advice to an investor is, when you've got a nice profit like that, book some of it and just run the rest for free. As for overbought, no, it's not. If you just look at the open interest on COMEX, there's no way it's overbought. I mean, the amazing thing is that most of this rise, both in gold and silver, has been on the back of a bear squeeze, not, enthusiastic buyers rushing in and buying it. And there's a complete misunderstanding, actually, about what gold is about. I mean, there are enough gold bugs running around saying, oh, it's going to the moon, or it's going to do this, going to do that. But actually, do they really know what they're talking about? I mean, they tend to look at charts, let's face it, and they've also got this thing in their brains about, government is wicked and therefore gold is good. It's not good enough, actually. You've got to really understand what the game is about. So the idea that gold is overbought, oversold is rubbish. It's got nothing to do with it. Really, what we're looking at is the relationship between gold and fiat currencies, which depend entirely on faith. And it's as simple as that. So, well, where are we? I mean, I think we can really say that gold over millennia, basically, its purchasing power varies very, very little. And there's ample evidence of that. But when it comes to fiat currencies, they come and go. They don't last terribly long, is a short answer. I mean, the dollar has really been a fiat currency for some considerable time. I would say since 1933, if you like, just before, they devalued it from 20.67 to $35 an ounce. But more specifically and more obviously, since the Bretton Woods Agreement ceased, was suspended, actually, in 1971. So we've had 54 years of pure fiat currency. But the destruction process actually started earlier than that. So we just bear that in mind. I think really what gold is telling us is that we're coming to the end of that era. And, anyone who's left holding the fiat baby is, basically has had it. That's what's going to happen. So that, I think, is the background. But the interesting thing is that the Chinese, who are a bit old-fashioned over these things, they didn't have the benefit of John Maynard Keynes teaching them economics, etc. They came out of communism, if you like, with the belief that the capitalist system would fail. And of course, the failure of the capitalist system, would be through its currency. And so they started accumulating gold, really, shortly after Mao Zedong passed away. And I've got an English copy of the regulations dated 1983, appointing the People's Bank of China with the sole responsibility for managing and acquiring the nation's gold and silver reserves. And this is terribly important. It's important to know this. The second thing to know is that no one in China was allowed to own gold until it was legalized in 2002. And that was the point where the Shanghai Gold Exchange opened, which facilitated the delivery of gold to the public. So we had this period between 1983 and 2000 when the China state acquired gold. And so where did it come from? Well, we had a massive bear market between those dates. And not only that, but, it was quite clear that quite a lot of central bank gold held in the West had actually gone out on lease, never to be returned. This was estimated by Frank Venerosa to be somewhere between 10 and 14,000 tons. In other words, between a third and a half of all central bank gold was out on lease, sold into the market, and not coming back.
Alasdair Macleod said the current squeeze in gold and silver will not be confined to precious metals, as base metals are also likely to follow. He warned that the broader consequences will be severe, making it essential to hold as much gold and silver as possible for protection. He emphasized that silver, being harder for governments to confiscate, is especially attractive in a collapse scenario and could even serve a more practical role than gold in day-to-day exchange if required. He further noted that silver is still not priced with any real monetary value. With the gold-to-silver ratio above 80, he believes a sharp revaluation could drive the ratio below 30 during a panic, creating significant outperformance relative to gold. Andrew Maguire, meanwhile, observed that gold and silver have already broken above their past highs in multiple currencies, including the euro and Chinese yuan, showing how fiat money is consistently losing ground to precious metals. He highlighted that silver remains heavily undervalued compared to gold, describing it as a clear arbitrage opportunity. In his view, Investors holding dollars should consider converting part of their holdings into silver, since the market setup with suppressed prices and short positions stacked above points toward a sharp move higher once pressure is released. Let's get back to the interview.
I think that this squeeze in the gold market and also silver, and it won't be just confined to them, because if you look at the value of base metals, they've been left behind hugely in all this. I think that's going to be a big catch-up. The overall consequences of this, I think, are going to hit everybody very, very badly. But it does mean that you've got to hoard gold as much as you can. Silver as well. Of course, the other thing is that governments could be stupid, as they always are, and they decide, oh, we're going to confiscate gold. So keep it away from the government, keep it away from the banks, because the banks will do what they're told by the government. Keep it out from the banks, and don't tell anyone you got it. Silver, I think, would be a lot harder for them to confiscate that. I really do. So that makes silver especially attractive in this collapse scenario. And also, it's probably, I mean, I don't see necessarily that we'll be going out and spending our gold or whatever, because that's not the role of gold, really. What we will do is we will find, our currency, we will liquidate whatever gold we need for currency, whatever its value, as it's needed. And you'll be able to buy a nice big mansion and country estate and all the rest of it for, sort of 10 ounces of gold. That's what happens. But you need to get your Britannias, maybe. I mean, if you can get someone to accept your Britannias, they'll probably bite your hand off, but then you can buy all
this. And no capital gains tax either. So
not on that, no, or on sovereigns.
Yeah, which is again amazing, because I sometimes say to people, look,
don't tell Rachel. Don't tell Rachel.
Yeah, exactly. But the thing, maybe if you're going to buy a single kilo of gold, why not buy the equivalent in Britannias or in
exactly.
sovereign?
I mean, the premium's only 2 or 3%. It's
I know. It's nothing, absolutely nothing. And then you've not only that, we're living in a communist regime here, and they're coming after anyone that's got any wealth. And we don't even know how that's going to roll out, shortly. But this is really timely, because I think what you're saying here, look, wake up, because this is real. It is a problem. It's going to happen, and obviously there is an opportunity, and especially you talk about gold and silver. I mean, look at every other currency, every other fiat currency that prices gold and prices silver has been through the roof a lot, led the way higher. And I look at CNY silver, Euro silver, forget 2011 highs in dollar silver. It's through the roof. It's just every day. It's higher and higher and higher. If anyone wants, to me, I'm saying to everyone right now, why would you not go after, swap some dollars for silver now? Because it's so clearly, it's your arbitrage. It's quite clearly undervalued. They've been sitting on it a long time. There's obviously a lot of short stops above the market. Otherwise, they'd have raised the margins on it by now. And it's a panic. So to me, that's what I'm saying to people right now. Right, what should I do right now? And I'm agreeing with you. Silver has to be a bargain.
Yeah, absolutely. And I mean, there's absolutely no monetary use priced in it. I mean, you've got a gold-silver ratio of 80 odd. If it was going to be priced properly as money, you'd be looking way below that. I don't think we get back to the sort of Sir Isaac Newton, 14.5 ounces of silver to 1 of gold type thing. But I can easily see this below 30, in this sort of panic. And that does give you, sort of huge outperformance. And of course, the other thing is that while the institutions might be fretting about where the hell we're going to get all this gold, the average investor, the man who feels that he's missed out on the gold run is going to go for silver. He's bound to. Because apart from anything else, he doesn't have to fork out the thick end of $4,000 for an ounce. He can you can buy an ounce for around about 47, 48. So that is extremely attractive, I think, to most people.
Both gold and silver stand at the core of a wider monetary shift, with gold preserving its role as a stable store of value and silver offering accessibility and undervaluation. The stretched gold-to-silver ratio, ongoing fiat currency weakness, and suppressed pricing highlight the potential for silver to deliver significant outperformance. Precious metals in this context serve not only as protection against systemic risk but also as vehicles of opportunity in a global revaluation of money. Could the widening strain on fiat currencies accelerate a revaluation of silver relative to gold? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.